everybody. It's Brian Shannon from alphatrends.net. Today is Friday, the 4th of August, 2017. Let's take a look at the market for this week. The NASDAQ, the Russell, semiconductors, and biotechs all lost a little bit of ground, as did oil and commercial real estate. The financials, though, up close to 2% as bonds were stronger, and the SPY did eke out a little gain as well. So let's take a look at the charts and see where we are. For the S&P 500, we've had our eye on this volume-weighted average price since the July 12th gap higher, and I've been pointing out that it has been acting as support, and it continued to this week. So I don't see any danger for the S&P 500 intermediate term unless we get below 246. And if we were to break below 246, the next level of interest would be the volume-weighted average price from the July low, bringing us down to about 245. Looking to the daily time frame, we're still clearly in a super strong uptrend here. We can draw all kinds of trend lines, maybe one that looks like this, and even if we were to pull back all the way down to that trend line, that would still be we still have a rising 50-day moving average, and I still think that this market is healthy. The NASDAQ slowing down just a little bit here, but still in a primary uptrend, of course. When we look down to the 30-minute time frame here, you can see that that same volume weighted average price from the July 12th gap, that NASDAQ has had a little bit more trouble with it, and I thought that perhaps we were going to come down to the volume-weighted average price from the July low, but we managed to close above it for the week, and really we're just in a more neutral sideways consolidation, and in order for the buyers to regain control, they're going to need it to get it back up above 144.5, so it could look like that, or perhaps we come down like this, and if that's the case, then we would of course look to the daily time frame for more guidance as to what the next potential levels would be. We're using things like Fibonacci and say, if it was to get a 61.8% retracement, that would bring it of this recent rally, the July range that is, it would bring it all the way down to 140. Well, we won't worry about that for now. We take it one step at a time, and if the market breaks below that level, then of course I'll be updating every single day for people who do subscribe to Alpha Trends what the levels are we should be focused on. The Russell 2000, 2 weeks ago, we wondered if this was going to be a breakout that held, and in fact it's turned out to be yet another failed breakout for the Russell 2000. This year it has a very strong pattern of breaking to new highs and then pulling back. We still have a rising 50-day moving average. I don't think that we're in the danger of a bear market or anything, but this level will be important to hold next week. If we get below and hold below 138.5, 139, perhaps things get a little bit more serious for the mid caps, so keep an eye on that. There's no reason to be a buyer of them here while they're below a declining 5-day moving average, and the volume weighted average price off that peak is still overhead, showing that they are still clearly in control. The sellers, that is, the profit takers. The semiconductors, their volume weighted average price from the July low did hold on a closing basis for the week, and as we've mentioned on the daily time frame, this is also the location of the 50-day moving average right in here. That's that green moving average, and as I always say each week, it's the direction of the 50-day moving average that's more important than one or two closes below it. What we do want to do, of course, is be cautious when we have a declining 5-day moving average, and certainly not chase gaps with a declining 5-day moving average. I can't imagine the people who bought up there and expected it to hold, and what it must have felt like 2 hours later, an hour later, to see it down 2 points from there. Anyways, when you have a declining 5-day moving average, the intermediate term trend is considered guilty till proven innocent. You want that to flatten out and begin to rise. Now, maybe next week we can see that happen actually for the semiconductors. If we were to do something like this, then I think we could see that this market does in fact get a bounce from that rising 50-day moving average on the bigger picture. So it's not just about one time frame, it's about how they work and connect together, and that's what you need to be aware of and understand which time frame makes the most sense to you personally. The biotechs, let's talk about this on a bigger picture, because this is one that I've been talking about a lot as far as some important levels, such as the year-to-date volume-weighted average price, which held numerous times here in the beginning of the second quarter, and then as it failed, it broke down and touched almost perfectly upon the volume-weighted average price from the election, and that's where it tagged it right here. So now I think that that represents an important psychological level, and the volume weighted average price off of that low, you can see, was touched here, and we remain above it, meaning that I think that the about the 311 level, where that 310 and a half to 311, that's going to be an important level for this market to hold as far as the psychology of the buyers from that event. The volume weighted average price from that recent high, you can see, did fail and is holding as resistance. So on an intermediate term basis, with this market below declining 5-day moving average, we want to see it start to stabilize in here, and then perhaps in some point next week, if we can get above this level, which was resistance, turn to support in this general area. It's not always an exact number, but if the IBB can do something like this, we wouldn't buy here, not with a declining 5-day moving average, but instead to see it pull back, and then perhaps 5-day moving average flattens out, and then get long somewhere in this area with a stop below that, whatever the most recent higher low is for the time frame that you're personally engaged in the market. The financial stocks, let's talk about them. They, of course, did have a strong week, as we noted, and they're at a level that is, on a weekly closing, it's a closing high on the weekly basis that goes back to basically, I guess, 2007 right now, and they continue to show leadership. It's been somewhat choppy on the way up, but the fact is they remain in a strong uptrend versus something like the energy names, which I've been talking about, saying that a lot of people have been getting excited about the financial, why do I keep calling them the financials? The energy stocks, because they were above the 50-day moving average. But as I've pointed out, it's the direction of the 50-day moving average that's more important than a few closes above it. That is, if they don't scare you out on the way down in a downtrend, they will typically wear you out as the market turns more flattish neutral. And I don't think that it's likely that the buyers are going to regain control, and especially when you see that the volume weighted average price year to date, if it was to get up towards that level, I still wouldn't be too excited about it. So I'd say stay away from these financials. If you feel like, I did it again, didn't I? I called them financials when they are in fact energy names. If you feel like you need to buy them on weakness down in here, because I think it's likely to just turn sideways for a while and build a level of support before it might be able to sustain higher prices. Be careful, as always, in earnings season. A huge winner this year has been this AAOI, and it failed miserably today, down real big here. It gapped lower and continued to sell off. Some people try to buy at a 50-day moving average or at a volume weighted average price like this one that I pointed out from this peak right here, which had held as support a couple times this year. But all you do is look at those levels as areas of interest. You don't buy blindly into a pullback, whether it's to the year-to-date volume weighted average price that looks like it might be tested next week, or the volume weighted average price that's been significant. Instead, what you do is you look to the shorter term time frame and you say, is there any actual evidence that the buyers are in fact gaining control? Here's today's action in AAOI with a 5-minute chart. Let's go down to a 2-minute chart, and you can see here that it looked like it was trying to establish some support in here, but as it broke a new low and stayed below that declining volume weighted average price, the sellers remained in control of that stock. And it's just the opposite of a stock like Tesla that reported earnings. They gapped up above a prior area of resistance, and this is where the buyers have regained control. Here, I think that the volume weighted average price from this gap will turn out to be something that's continues to be important moving forward. And in Apple, if you look at the action there, so far, the volume weighted average price from that earnings related gap 3 days ago is indicating that there are sellers in here taking advantage of this gap higher. It doesn't mean they're going to stay in control, but for right now, you don't want to be a buyer of it while that volume weighted average price off the peak is still declining. So a lot of uses for the volume weighted average price. If you missed my post about it, I did a video and a post about it on alphatrends.net. That is still up. up, and I will post that. I will link to it, that is, with this video on alphatrends.net homepage. Hope you had a good week of trading, and I'll talk to you again next week. Thank you.